Do you believe the world's third largest economy, Japan, is on the brink of collapse? Most people do. But what if I told you that was just a perfectly orchestrated illusion, a monumental financial play slowly unfolding that will dictate your financial future in the coming months? Whispers are roaring through Wall Street. Warren Buffett, the greatest investor of all time, is making the biggest blunder of his career with a massive bet on Japan. But is it a blunder, or is it a stroke of genius you absolutely cannot afford to ignore? I don't care if you're lying flat or fighting back in this current market, because the financial time bomb we've been warning you about has finally been triggered. And when it detonates, your wealth will either vanish or multiply exponentially. The choice is yours.
For weeks now, the entire financial world has been buzzing about one thing. Japan, this economic behemoth, is having serious trouble with its own government bonds. Put simply, no one wants to lend Japan money anymore. You might be thinking, Japan collapsing? What does that have to do with me? I'm in America. Hold on. If you trace back the clues of the 1997 Asian financial crisis or the 2008 Great Recession that shook the world, you'll uncover a shocking truth. Every major financial explosion did not start in the US. It started in Japan.
Sounds crazy, right? But it's the truth, and this time it's more critical than ever before. Japan is drowning in a staggering 1.3 quadrillion yen of debt, a number so colossal even they can't pay it back. For years, they've played the borrow new to pay old game, but now that game is over. Their government bonds are unsold. No one wants to lend them a dime. And if that wasn't bad enough, the Bank of Japan has been aggressively raising interest rates. Imagine, you're buried in debt, no one will lend you more, and your bank keeps hiking your interest payments. That can only mean one thing. Japan is heading for default. And when that happens, the yen could become worthless. Your investments could be wiped out. Or could they?
If Japan really was collapsing and the yen was turning into toilet paper, what would you do? You'd dump all your yen for US dollars or other safe haven currencies, right? But here's the bizarre part. When we converted a large portion of our US stock market profits into Japanese yen last year, everyone called us crazy. They said the yen would crash and we'd lose everything. The result? The yen has appreciated by over 10%. Our entire US stock market gains increased by another 10% just from currency exchange.
Even the Japanese Prime Minister himself admitted their financial situation is worse than Greece when it defaulted. So why is the yen becoming more valuable by the day? Here's the secret. The yen's value has nothing to do with a national bond crisis. It's tied to another factor, one the financial elite doesn't want you to know: Japan's strategic interest rate hikes.
For years, Japan maintained near zero interest rates. Money in Japan was practically free. But look at this pattern. Year 2000, Japan raises interest rates. The dot-com bubble in the US bursts. Year 2008, Japan raises interest rates again. The global financial crisis. Last March, Japan raises interest rates once more. US stock market drops 6% in April. Last July, Japan continues to raise rates. August, US stocks plummet 10%. This January, Japan raises yet another. US market crashes from February to April. Do you think this is a coincidence? Think again. Why does a move by the Bank of Japan have the power to destroy global wealth? And why, upon seeing this pattern, did we swiftly move most of our dollar-denominated assets into yen? If you don't want to be a casualty in the coming financial bloodbath, and instead want to turn this into a golden opportunity to leapfrog your current financial standing, then you need to understand this. Let's revisit the debt issue. The Japanese Prime Minister claims their debt is worse than Greece's before its default. Looking at the numbers, Japan's debt is 262% of its GDP, meaning the average Japanese citizen would have to work non-stop for 2.5 years just to pay it off. Sounds terrifying, but here's the little-known secret. Over half of the Japanese government's debt is owed to the Bank of Japan itself, which simply prints the money to lend to its own government. Listen closely. The Bank of Japan prints 1,000,000 yen and lends it to the government. The government spends it. When it's time to pay back, they only need to pay the interest, and Japan's interest rates are practically zero. And here's the crazier part. When the government pays the interest, the central bank has to remit those profits back to the government.
This is a left hand feeds the right hand game. The Japanese government effectively does not need to pay back its debt. This is the core difference from Greece. Greece owed money to outsiders, but Japan owes money to itself. And there's more. The Bank of Japan also holds over $1 trillion in U.S. Treasury bonds. Annually, the U.S. pays Japan over $40 billion in interest. That interest, again, flows from the Bank of Japan back to the Japanese government. In summary, the Japanese government owes $180 billion in annual interest, but half of that is to itself, and $40 billion comes from U.S. interest payments. So, they only truly need to cover $50 billion annually. What's $50 billion? Warren Buffett has trillions. Japan just needs to produce a few more anime films and they've got it covered.
Japan's financial situation is actually far safer than most other nations. If they truly couldn't cover that $50 billion, they just fire up the printing presses and lend to themselves again. Up to 70% of Japanese government bonds are bought back by their own central bank. Sound familiar? This is exactly what the US is doing. But the Japanese invented this trick and are doing it on a far grander scale than the US. This is why the yen has generally depreciated. But that depreciation attracts tourists, makes Japanese exports cheaper, and boosts the average citizen's wealth. Japan is the world's fourth richest nation, primarily due to its vast foreign assets. For years, we avoided investing in Japanese assets because even if stocks rose, yen depreciation would leave you flat or even at a loss. But since last year, we've been shifting to the yen. Why?
Last April, foreign investors bought a record $30 billion in Japanese bonds, yet Japanese bonds still went unsold. Why? Because the Bank of Japan intentionally did not intervene to prop up prices as they used to. What happens when they do that? Bond prices crash and interest rates skyrocket. At this point, the Bank of Japan has a legitimate reason to raise interest rates. But why would Japan want to raise interest rates? They claim it's due to inflation. But Japan has historically had negligible inflation. Even when there was mild inflation, they doubled their money supply. So, inflation is not the real reason.
The true reason is singular. The Bank of Japan is effectively a subsidiary of the U.S. Federal Reserve, the Fed. Their mission is to coordinate and follow the Fed's orders. When the Bank of Japan stops buying government bonds, interest rates surge, and money from all over the world starts flooding into Japan. The yen dramatically appreciates. In other words, Japan is collaborating with U.S. capitalists to siphon money from across the globe.
Remember 2008? The Lehman Brothers bubble burst. But where did the money come from to inflate that bubble? Before 2007, Japan maintained near-zero interest rates. The world frantically borrowed from Japan, using that leverage to invest in U.S. assets. When Japan raised interest rates in 2007, those global loans started being recalled. Investors were forced to sell assets to repay yen-denominated debts.
causing global asset prices to collapse. The yen surged by 40%. And who appeared like an angel to save the day? The Fed. They slashed interest rates to zero, relentlessly printing money for U.S. capitalists. Those capitalists used that free money to buy up fire sale assets across the world. Japan's low interest rates inflate bubbles. Japan raising interest rates is the signal for the Fed to pop those bubbles and harvest cheap assets. This exact pattern repeated in 1997 with the Asian crisis and 2000 with the dot-com bubble.
Since 2022, the Fed has been aggressively raising interest rates. Logically, the U.S. economy should be struggling, but in reality, U.S. stocks are exploding. Why? Because while the rest of the world raised rates, only Japan kept them low. U.S. businesses can't borrow money in the U.S.? No problem. They borrow from Japan at near zero interest, then bring it back to invest in U.S. stocks, even buy back their own company shares. Right now, Buffett is saying the dollar will crash. Wall Street is saying the dollar will continue to depreciate. The U.S. government says the economy is headed for recession, and Japan is announcing it's about to raise interest rates. Everything is clear. The dollar will depreciate, the yen will appreciate. This is precisely why we moved assets from dollars to yen, to hedge against risk and profit immensely.
This is no longer an easy money environment. Look, one tweet from Trump can send Tesla down 15%. Apple can drop 10%. The solar energy sector can plummet 30% overnight. If you lose 15%, you need to gain 17.6% just to break even. Lost 30%, you need to gain 42.8%. Do you have that margin for error? The current U.S. stock market makes it extremely difficult to cut losses, to control risk. We are not prophets. We can't predict war, earthquakes, or tariffs tomorrow. The only thing we can do is play the probabilities. When investing, don't just look at the U.S., look at Japan, because global capital flows originate from Japan. When Japan recalls its capital, the world will face a money shortage, and a financial crisis will erupt.
Japan is coordinating with the U.S., intentionally letting its government bonds go unsold to create a pretext for raising interest rates, draining money from the entire world. Japan's fourth or fifth interest rate hike will push the world to its breaking point. That will be the moment global assets hit rock bottom, and the moment U.S. elites bring out their accumulated cash to buy everything at a discount. This is a once-in-a-lifetime opportunity for you to reposition your assets, learn to read the market, and turn this crisis into personal fortune.
The situation will only become more chaotic. I share free information on how to build wealth, become an entrepreneur, an investor, and achieve financial freedom. If you don't want to be left behind, if you don't want to miss this historic opportunity, subscribe to this channel right now. Turn on notifications so you don't miss a single video. Share this video with anyone you care about. I believe that if just a few sentences I've shared today help you see the global financial picture more clearly and take the right action, that will be our greatest success. Act now.